Hey, folks, Friday, the 22nd of July, 2022. And yeah, we had a really interesting day yesterday out of the ECB, of course, coming out with the 50 basis point hike from Christine. Market really taking that quite well, euro to the upside initially. And then as we came into the presser, just a complete unwind back below where we had started that data release and resurging dollar strength and euro not really out of the woods, and it's I think a certain amount of that 50 basis point hike was priced in. The bund initially taking the downside, but now the bund back up this morning, up about 1.1% on the session. We've had out of France and Germany poor services and manufacturing PMIs coming in below at the 50 expansionary marker. So, a lot of 49 prints out of Germany and France. So, leading to a little bit of unsteady trade on the DAX, albeit we are marginally on gains here, 0.16 up on DAX, but the bund really pricing in that risk and contractionary territory technically. So, let's get over to these charts and have a little look at what we're seeing so far this morning. And we're going to look at the euro, we're going to look at the S&P, and we're going to look at gold actually. So starting off though, we'll have a look at the risk picture here on the bund. You see just at 152.16 finding support this morning. Really poor manufacturing and services data comes in and bang, up we go, holding on the highs here with the bunds so far. So I think it's got a little more to go. I think 154.66s, and albeit I think at least by Monday 155.92s. Just people into the bonds, and T-notes you see is also on the rise there, up 0.5% on the session. Gold, however, as we look at the risk picture, wanted to look at the gold trade at the moment, and you can see here yesterday coming in. I'll switch to the weekly bars in a second, but you can see the trade there kind of coming down. I'll pull that off the screen, but you can see coming in just shy of the 1677 spot nines. Big buying program coming in there on gold. And why is that bid coming in? Well, I really like what I'm seeing on gold here now. So we have this very large bull flag on the weekly bars coming in. So that's the low of the week of the 1st of June 2020 to the high of the week on the 3rd of August 2020, giving us that bull flag against also the high here of the week of the 22nd, the week of what was this, the 7th of March 2022, and then down we come. So, George in the room yesterday saying, well, Tim, if we're putting trade in below trend here, do you see that as full fake out? I said, yeah, but, the fake out could go quite deep, and it didn't really go that deep at all. And so as we went through the session into the US session, it was quite easy then to look, after we'd blown out on the lows, quite easy to look for the longs. And we indeed did get a nice long here and something highly swingable for the upside. So I'm actually targeting on this swing back into the middle of the range and the top of the range over the coming months actually on gold. So yeah, just to make you aware of that one. All right, S&P and the Dow yesterday coming into really nice areas. We have been looking at a composite area around here, and to then be buying and came in selling down on the open. So you had an opening drive to the downside and then a reversal back up, getting above what were these morning highs. There was a little bit of a dropout. There's a very tight range here basically. Yesterday it was actually something more like this, a very tight range, just dropped out, you can see, and then bid back up. Very almost mirror image trade to be had, buying that dip yesterday on the Dow. And so we're looking for what would be the 100 EMAs above. I think we have the 100s on here. Yeah, 40.86 is the sort of medium term target here. Obviously a lot of areas and levels to kind of take out on that journey up there, but I think what we've seen is pretty decent show for the buyers yesterday on equities. And that's kind of following on positive week so far out of European equities on the restarting of the Nord Stream 1 pipeline. which happened, of course, yesterday morning, albeit only 40% back online. But Europe kind of getting away from that harsh winter no gas picture, right? So anyway, we're still looking at longs on equities despite poor data out of Europe this morning. We have the equivalent to come out of the US, the manufacturing services PMI set to come out at what time is that at? It's at 2:45 GMT today. So looking out for that one. Oil, a lot of people saying, well, because Libyan supply is coming back online, we've been underwater. Russia pumping at greater levels than before the invasion. Yeah, I can get on board with that, but I just think from a structural point of view, we are still very, very tight on the oil picture. And I kind of have to be bullish on anything holding above this invasion top 90.51s. Of course, we rolled on volume here on Monday to the September 2022 contract. So, might be just a little bit of, selling out of the, what was the August 22 contract, maybe, leading us to the downside, and then just people rolling into September, then kind of, getting long again on the curve. So I don't know. Look, I don't want to big this up too much, but I think even if we trade down to the invasion top area, I think we're going to see buyers lifting that back up. So, but not really doing much oil trading at the moment, given that clarity is as clear as mud right now. So, all right, that's it for me for another pre-US session. I'm off the desk on Monday for bank holiday here in Ireland, and I will be back with you on Tuesday. So if I'm not talking to you between now and then, have a fantastic weekend. See you.